Good morning, you're watching Niaga AWANI with me, Nabila. Let's begin with the economic impact of the escalating conflict in the Middle East and how it's shaking global markets. Alright, MSCI's global equities index fell with treasury yields on Tuesday as investors shield away from risky assets, while all futures rallied on concerns about supply after Iran launched missiles at Israel. However, Wall Street stocks ended above their session lows, and treasuries yields also pared declines on hopes that further escalation of the Middle East conflict was not imminent. Earlier on Tuesday, Iran fired a salvo of ballistic missiles at Israel in retaliation for Israel's campaign against Tehran's Hezbollah ally in Lebanon. The United States condemned Iran's move and said it was consulting with Israel on a response after U.S. military forces helped Israel defeat the attack. The U.S. dollar index rose and gold, traditionally a safe haven, rose during the session to more than 1% as investors looked for less risky places to put their money. Oil prices rallied as escalating violence raised concerns about supply. And adding extra pressure to equities, the S&P 500 and the Dow had ended Monday's session with record closing highs. Oil prices settled higher, though below their highs of the day. Clay Siegel, an independent political risk strategist, said that an Israeli attack on Iranian oil production or export facilities could cause a material disruption, potentially more than 1 million barrels per day. U.S. crude settled up 2.44% at $69.83 per barrel, and Brent settled at $73.56 per barrel, up to 2.59% of the day. Earlier in the day, both crude benchmarks rose more than 5%. On Wall Street, the Dow Jones Industrial Average fell 173.18 points, or 0.41%. The S&P 500 fell 53.73 points, or 0.93%, and the Nasdaq Composite fell 278.81 points, or 1.53%. MSCI's gauge of stocks across the globe fell 6.09 points, or 0.71%, to 845.69.
The launch of the missiles by Iran against Israel is first and foremost a human tragedy, and thoughts and prayers go out to any of those damaged by that. From the market perspective, interestingly, we were down early in the day before this, and I think investors are really still focused on the Federal Reserve and the soft economic data we got this morning from the Purchasing Managers Survey. That said, as we watch this conflict unfold, I think the key question is what happens if it starts to widen? Do others start to get involved? Does it get extended? And does that start to really impact oil prices a little more? The impact so far has been modest, and I think investors are going to be able to shrug this off for the moment as they focus more on the economic story, which may be getting better in China and is really fairly solid here in the U.S.